Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about one of the most popular funds that you can find on Robinhood, and that is VOO, which is the Vanguard S&P 500 fund. Currently, this is up about 10.5% on a year-to-date basis, and this is a fund that tracks the entire S&P 500. It has a very attractive spread of companies, primarily looking at the largest weighted companies in the S&P 500, with one of the notable increases this calendar year being in Nvidia. That has definitely helped to drive the overall fund up so much this year. If you come down below, you can see that on the expense ratio, this is going to be a little bit better than SPY at 0.03%, which is incredibly attractive. Now, one of the things that I would note is if you want to buy into this particular fund, you'll note over the past 5 years, it's done incredibly well. And that is by no means an indicator of forward performance, but one of the things I would note is that the S&P 500 has always gone up over time. Now, at this point in time, you can see that it is on an incredibly static new high, where we've seen a rampant increase over the course of the past 7 months or so. But one of the things that I would note as we're evaluating or looking at the S&P 500 at this point in time is that it may be an appropriate time to hedge your position a little bit. One of the ways that you can do that is by trading options. Now, options are the single best way to lose money in my humble experience. That being said, one of the things that I like to do when we have a large position like I do in the S&P 500 is to look at some of the options that you can buy and purchase with some time. So one of the things that I would note is that you can get pretty attractive options prices for a couple months out in the event that the overall market were to decline whatsoever. So you can see the 440, 445 on July 19th is trading around 480 and 470 a piece. I find this to be incredibly attractive because, as you can see here, it gives you the opportunity to hedge your bet a little bit, recognizing that the larger percentage of my holdings are in the fund itself. So this is a very attractive way to get exposure to the short side without having to sell any shares, but it does put your free cash at risk, recognizing you're not going to benefit from that if the overall fund continues to go up, which, as you can see, on a monthly basis, on a weekly basis, on a year-to-date basis, the fund has done incredibly well. But I'm very interested in knowing how you are hedging your positions, or are those of you who watch the channel just going all in on the bullish side? Let me know in the comments down below. Thanks for watching. Talk to you later.